welcome to 8 Tips for Building Your Credit. My name is Todd Christensen. I am Director of Education at the nonprofit credit counseling agency called Debt Reduction Services, Inc. I appreciate you joining me here today. Let's just get right into it. Step 1, if you want to build or rebuild your credit, check your credit report. Go to annualcreditreport.com. Make sure everything's accurate on there. If you see any inaccuracies, anything that you do not recognize, there are instructions at the end of each report, and it will give you, tell you how you can dispute that. It doesn't take long, pretty quick, pretty painless. But get your credit report, annualcreditreport.com. You can get it from Equifax, Experian, and Transunion every 12 months. Number 2, start with contacting a family member, somebody that you can trust and that maybe will trust you back, hopefully, because you're going to ask them if they would be willing to put you onto their credit card account as an authorized user. Obviously, you want to talk to somebody who has good credit. You are going to inherit some of their good credit. They are not going to be impacted, conversely, by your credit. So it's a one-way, kind of feel-good opportunity. You don't even have to see the card. The card can go to that individual, that family member. As soon as they get it, they can even shred it. They don't even have to give it to you. You don't have to use it. It's just a way, particularly for parents who are helping their teenage or their young adult children start to build their credit, for that information to make it on, the positive stuff to make it onto your credit report. Number 3, not all states do this, but there are many states that allow you to have your utility company report your history of payments to the credit bureaus. So you can contact your heating company, your electric company, ask them, are they permitted in your state to report your history of payments to the credit bureaus? If so, ask them to do that if they would do that. Not all states do, as I mentioned. It won't have a huge impact, but it can have a positive impact on your rating. The next steps then start to involve actually applying for accounts in your name. And let me just say this, don't apply for more than 1 or 2 accounts a year. And then I'm going to start with those that are easiest to get, and we'll go down to those that are a little more expensive and have some fees. First, if you have to buy tires for your car, consider applying at a tire store. They're usually easier to qualify for. They are going to charge higher interest. When you get home, at the end of that purchase, go home, either pay the whole thing off or pay all but maybe $50 off and make monthly payments for the next 5 or 6 months. That'll really help you build credit. Then after that, another place to start to continue with would be a retail store. Most retail stores that you can find, you would find them in a typical mall, and they have their own store card. Higher interest, yes. Some of them even offer you a small discount for opening an account. Do not leave the store though until you pay that off in full. That's what they want you to do, because that's how they make a ton of money, is charging you interest, and where you only make the minimum payments because you forgot that you made that purchase 30 days ago. So pay it off. Sometimes you can even pay it off right there at the cash register. But don't leave the store until you pay it off. The next few would be where you go to a bank. Go to the bank or the credit union where you have your account. Hopefully you've had it there for a year or 2 or 3, and that you've been pretty responsible with it. Ask them if they think that you might qualify for a small credit limit credit card, $500 for example. If you still can't qualify for that, ask them or shop around and find a secured credit card offer. This is where you put money into a secured savings account. The bank or the credit union hangs on to that until you are done using, or until you convert your secured credit card to a normal card. A secured card, basically, it's whatever. If you put on $300 into a savings account, you have typically a $300 spending limit on your credit card. Make a purchase, pay it off. Make a purchase, pay it off. If you miss a payment, they're probably gonna freeze that account, take the payment from your savings account until you get that built back up. So don't go overboard though. Don't carry that card around. Only make 1 purchase a month. And I gave the 2 examples. Maybe your cell phone every month. It's typically going to be the same amount every month. Or even better, because it's smaller, like a Netflix account. Make a payment and then pay it off automatically every month. Then you get into what are called the credit building or credit rebuilding loans. Banks and credit unions Not all of them offer this, so you'll have to look around. They're not very common, but basically they give you, let's say, a $1,000 loan. They put it into one of these secured savings accounts. You can't touch it until you pay off the loan. There are no prepayment penalties, but typically it takes about a year to pay that off. What they require is employment and a direct payment method from your employer typically. So there you have it. Steps for rebuilding or building your credit, from the simple and easy down to a little more complex and those that carry some fees. Again, my name is Todd Christensen, Director of Education at Debt Reduction Services. Please take a look around our site here for other information on building credit, paying off your debts, managing your household finances, and saving for emergencies. But thank you for joining me today.